Why does the US dollar and Canadian dollar keep getting stronger against Indian rupee? The answer is actually simpler than most people think. Think of currencies like concert tickets. If more people want the ticket, the prices go up. Currencies work exactly the same way. If the world suddenly need more US dollars, the dollar becomes stronger. And if fewer people want rupee compared to dollars, the rupee becomes weaker. At the end of the day, currency prices are mostly driven by global supply and demand. Now let's talk about US dollar. Whenever the world becomes uncertain, wars, inflation, economic slowdowns, financial fear, global investors usually run towards the US. Why? Because the US is seen as one of the safest places to park money. So investors move money into US banks, US stocks, US bonds. To buy those things, they first need US dollars. So global demand for dollars explodes, and when the demand rises, the dollar gets stronger. Canada is a little different. Canada exports huge amounts of oil, natural gas, metals, raw materials to the rest of the world. Now imagine oil prices suddenly rise. Countries buying Canadian oil now needs more Canadian dollars. That increases demand for Canadian dollar. So when commodities and energy prices are strong, Canada's currency often gets stronger too. India's economy works a bit differently. India imports massive amounts of oil, electronics, machinery, energy, and gold. And most global trade, especially oil, is priced in US dollars. And here's the important part. If oil prices rise, India suddenly needs way more US dollars to buy exactly the same oil. That creates huge demand for dollars inside India. And when more people want dollars than rupees, the rupee weakens. There is another major factor too, foreign investors. If global investors become nervous, they sometimes pull money out of India. To do that, they sell Indian assets, sell rupees, and convert that money back to US dollars. Now, dollar demand rises again, and that puts even more pressure on the rupee. This doesn't just affect governments or banks, it affects normal people every single day. Because when rupee weakens, fuel gets more expensive, imported products cost more, iPhone becomes pricier, foreign vacation costs more, studying abroad becomes more expensive. Because India must now exchange more rupees to get the same amount of dollars. There is a hidden advantage as well. If you earn in stronger currencies like US dollar, Canadian dollar, or British pound, your money converts into more rupees. And Indian exporters can benefit too because Indian products suddenly become cheaper for foreign buyers. What actually strengthens a currency over many years? Usually, countries that export more to the world, reduce energy imports, attract foreign investment, build strong industries, control inflation, and earn global trust tend to build stronger currencies over time. And this is exactly why India is heavily investing into manufacturing, semiconductors, renewable energy, infrastructure, and export growth. So the long term goal is simple: make India less dependent on imports and make the world buy more from India. So the currencies don't move randomly, they move based on trade, oil and energy, investor confidence, global demand, and economic strength. And once you understand currencies, you start understanding how the modern economy actually works. Let me know in the comments what other economics or tech concept you want me to simplify. Follow along if you found this helpful.